Hey everybody, welcome to the morning market briefing. It's Tuesday, August 2nd, 2022. Hope you're doing well. Quick snapshot of the markets. Futures down for the most part. Dow futures down 57, S&P down 66, NASDAQ down 84 basis points, oil down just a touch, gold's up, silver's up. Nobody cares about crypto, so
big day for soybeans though.
Big day for soybeans. The soybeans are back. Soy boys paying through the nose for this stuff. Jumping in right away, Nancy Pelosi going to Taiwan. I mean, did you think she was not going to go to Taiwan?
I didn't think she was going to go.
I felt like she was going to Taiwan the whole time. It just seems like this is a real crusade for her. Like she's showing her bravery.
This is a classic "don't be a martyr" situation.
Yeah. So first Speaker of the House to go to Taiwan in 25 years, first since Newt Gingrich. Gingrich, however, went to Beijing first before going to Taiwan. White House trying to defuse this situation. I don't know, Ben, what's the angle here?
Yeah, so they repeatedly trying to make clear that Nancy Pelosi does not represent the executive branch of the United States.
Right.
They're saying that there is no reason to use a potential visit to justify or to spark some sort of crisis or conflict, said John Kirby, the White House's National Security Council guy. Biden told Xi in his conversation last week that the U.S. policy on Taiwan hasn't changed and that Congress is independent from the executive branch. But, you know, China's saying allowing Pelosi to visit without consequences would only invite more senior political officials to actually go to China, and therefore it needs to be stopped. And so they have said in a quote that probably everyone's heard of is that those who play with fire will perish by it. So, I think they actually said the official quote was those who play with fire will get burned, but perish is certainly stronger. She's previously taken some risky trips, though, one to Tiananmen Square in 91 and then one to Kiev back in May. So she's no stranger to pushing a little bit and trying to play in that gray area. And I think she's trying to do that now.
She's brave. She's just so brave.
Yeah, super brave. I mean, if she ends up being Archduke Franz Ferdinand and starting World War III, I mean, good for her, but she's not going to be able to bask in that glory for all that long. So I guess we'll see how today goes. Do we know what time she's supposed to publicly appear? Because this is a dumb question, but is it tomorrow there already? I think it's like 14 hours. So it's probably
getting close.
It's
getting
close to tomorrow. It'll be around kind of noon.
Alternate headline: Nancy Pelosi travels to the future.
Yeah. I would say, as far as markets are concerned, I would say that the market's probably pricing in some of this today, and to the extent that she goes to Taiwan and leaves, the market probably rally on that.
Yeah. We did get ISM manufacturing yesterday. The headline number down just a bit, 52.8 down from 53. Then it seemed like prices were kind of the big story, at least in our initial read of this. What stood out to you?
Yeah, I do think that prices were positive. I thought that this was one of the better ISM manufacturing reports that we've seen for some time. I was surprised the market actually didn't rally more on that news. There was some commentary that was definitely referring to a slowdown in business, and I do think that that's taking place, but we also already know that. It makes me a little bit more optimistic on prices. It's probably a little bit more accentuated in the manufacturing side of the economy because of freight and energy costs, which fell in June. And the bigger issue right now is on the consumer side. So we'll get the ISM services number, which will be more consumer facing. That'll come out tomorrow. That'll be based on some retail trade numbers as well. So that'll probably be more impactful at this point in the cycle than the manufacturing side, because the manufacturing side is still working through a backlog and kind of just going. New orders weren't great. Employment wasn't great, but definitely better than I was fearing.
Yeah, the slowdown definitely you see it all over some of the commentary. One company saying inflation is slowing down business, and others saying growing inflation is pushing a stronger narrative around pending recession concerns. Many customers appear to be pulling back on orders. Another company still saying our markets are still holding up. However, I believe a slowdown is coming. We're cautious about going out too far with orders. So certainly seems like we are on the precipice of this as we look at just the way companies are communicating in terms of what their strategy is looking at.
At the end of the day, a lot of this is attitudinal. And I think that beginning in May and then certainly into June, there was a big psychology shift, especially in tech world, especially in retail and among consumers as well, as gas prices were high and people said, man, we really need to pull back on stuff. They just bought their tickets for their summer vacations. They didn't have any money and they pulled back, and now they feel a little bit like they've taken a breath, and July was a little bit better. But I don't think that ultimately changes the trend, the inexorable trend of what we're seeing, which will mean that you'll have these attitudinal shifts within the broader trend of down. And I think July was a little bit of a positive attitudinal shift.
Yeah, that makes a lot of sense. We do get the JOLTS job opening data today at 10 a.m. We'll give you those numbers tomorrow. The June estimate is for 11 million, down from 11.3 million openings in May. I feel like in the overall scheme of the employment picture, this is almost more circumstantial data, especially given some of the lags that we have in the reporting. But Ben, how do you kind of think that's going to shake out?
I think it's going to be relatively positive. I think there's going to be fewer tech and retail jobs, especially if you looked at LinkedIn data. It looks like the hiring definitely fell down in the month of June. Whether or not we see that in the job openings data, though, is difficult to tell. I think we're going to see more of an accurate picture on the Friday report when we actually get unemployment, which will also incorporate not only job openings, not only hiring, but also the net impact of layoffs and people just saying, yeah, the job posting is still out there, but we're not really actively pursuing it.
Yeah, it's a tough read through because the job openings could go down, but that doesn't mean they got filled. It might be just they got dropped.
Which I think the Federal Reserve might actually want.
Because
they want fewer job openings. So I think the worst report for the market right now would be perversely like a 12 million number on the job openings or 11.5 million number on the job openings, because that would just mean the Federal Reserve continues to keep its foot firmly planted on the brake. If we get something in the 10 million range, especially the low 10 million, I think that that's probably positive for the market, but really it's just a punt until the Friday report.
Yeah.
On the earnings side, we've got Caterpillar that reported down about 3.7%. Uber up 12%. So kind of a, I don't know, if the bar's set low enough, you too can succeed type story there. Ben, what stood out from those companies?
Pricing. Caterpillar also saw a little bit of a decline in China, which shouldn't really have been a surprise given the lockdowns, but I think that demand there is not coming back as quickly as people thought. Definitely thinking that I think there was too much inventory, frankly, built up for Caterpillar. And even in their guidance, they're talking about higher sell through. Notably, they're not talking about sell in the Q3 and the Q4 quarters. So my guess is that there was a lot of inventory built up, probably a bit too much, especially in pockets, especially in China. And as a result, I think that that's probably what's driving Caterpillar lower. In terms of what they're actually doing, they're raising prices pretty aggressively in construction. The average price went from 7.7% up to 9.5% in Q2. Resources went from 7.8 to 12.5, and energy and transportation went from 2.6 to 5.2. And they expect higher prices in the second half of the year, as they expect those higher prices to more than offset the manufacturing cost increase. So inflation definitely a theme for Caterpillar, with a China offset on volume. And then Uber, they're just taking more and more money. So whenever you book an Uber, the Uber Eats or Uber Drive, they're now taking 26.6% for when you're a passenger, and 19.4% when you do Uber Eats. And that's up significantly from 18.7 and 15.2 on a year-over-year basis. So they're taking about 30%, 20 to 30% more than what they were taking this time last year. So drivers not necessarily getting paid all that much more, but a lot more money is flowing to Uber, which is what they wanted to do. The CEO said in May in a letter to employees that they really need to accelerate profitability. So what they're doing is they're keeping more for themselves they're paying their drivers less, and they're cutting costs on a corporate level, which is good for Uber stock, I guess. It's up 12%, you said this morning, but it's not so good for their drivers, and it's not so good for their passengers. But time will
Uber's
tell if
just
it's good for the brand.
I don't Uber much, but it's so expensive.
So expensive.
We looked at an Uber on Saturday night just from the Battery to our house. It's like 8 miles. Call me old school, but I just took a taxi cab.
Yeah, I mean,
People were shocked and appalled when I was just like, we're just gonna go home in a taxi.
So what's the difference?
And we saved like $35.
it's crazy what they're charging. I think one of the reasons is we've kind of left. I don't know, is it taking the blue pills in terms of the Uber now? We're not basing it on any law of supply and demand anymore. It's just based on need, and they're pricing based on, they're taking out a huge set of the consumer base and just saying, look, these consumers are completely price insensitive, and we're going to price as high as we can. We're going to forego all those consumers that don't really add value. We're just going to go for the cream of the crop and service those guys, because those are the ones who will actually make us profitable.
And it was really easy when they were a private company to just lose money hand over fist, undercut taxis. And then, once you become public, you got to make money. VCs don't care. They'll keep pumping money into you. But once you go public, they want a return on investment. And I think that's what we've seen over the last couple of years, really.
Yeah, it's just a bizarre model where I think you're exactly right, Ben. I don't think the economics are. I mean, I remember surge pricing used to be such a big deal. Like, it'd be like, hey, let's leave a game early to avoid surge pricing. Now it's like the pricing almost doesn't matter. Like, it's always more expensive than you think it should be, no matter where you are, where you're coming from, where you're going. It's just kind of insane.
And you talk to the drivers, and they're not making a ton of money.
No.
It's just Uber. And if you think about it economically, you have a middleman now. With a taxi, you didn't have a middleman.
Yep. Yeah, and the taxi, right when I got in, it goes, good choice, folks. Uber and Lyft leave a lot of folks stranded, man. He must have said that 12 times.
It's true.
He gave us a business card, one of which was completely blank. He gave us 2 business cards. One was blank on both sides.
One was just a card.
You write your own story.
Yeah. We'll wrap it up there. We'll be back tomorrow morning at 8:30. Talk to you guys soon.